So then we ask ourselves, right? We go from this discussion of meme stocks and AMC and all this type of things, right? But what are some bad reasons to buy AMC then, right? What are the bad reasons? What are the reasons that you shouldn't fall into this idea that it's okay to buy based on any of these reasons? The first reason is, well, the share price can go as high as it wants to go, right? It's still relatively low compared to other share prices, or the market cap is relatively low compared to other companies that are really large, right? Well, those other companies are really large for a reason, right? And price means nothing. Price means absolutely nothing in the stock market. So don't think that just because a share price is low that the stock can keep going up forever. And don't think that just because it's hot that it can go up forever. Eventually, demand runs out. And when demand runs out, one of two things happens. Either the stock trades sideways or the stock eventually drops. Okay, so don't just invest based on share price. Don't just buy based on share price. Another reason that you shouldn't buy AMC stock is that a short squeeze is not imminent. Right? Just because you think you can jump in and help in squeezing the shorts, that's not necessarily the case. Now, it has been done, quite obviously, right? That's what's driving the stock upward. But that doesn't mean that it's imminent. It doesn't mean that you're going to get the pop that you want out of a particular company. And you may not be willing to wait, as long as you may have to wait for this short squeeze to actually occur, right? Or the shorts may get squeezed out. And then there's no more shorts left, right? Which is kind of where we are moving towards with companies like AMC and GameStop, right? Where these shorts have been, out of the stock for a while, and they're either taking short positions from higher prices, or they're just not shorting the stock at all right now because they don't want to get squeezed out and take those losses. Okay, so don't believe that a short squeeze is absolutely imminent. Another reason that you shouldn't buy AMC is that, 99% of the theaters have reopened, so it's obviously going to make money. Well, not necessarily, right? There are different rules right now for who can go where and whether or not they can wear masks and what the capacity is. And these theaters haven't run in a while, so there may be some issues, right? And they may have a lot of competition. They do have a lot of competition from streaming services, right? So don't believe that just because they're reopening that they can provide the value that you have ascribed to them in your purchase of their stock. Okay. Then another reason that we don't want to buy AMC is that, hey, I like going to the movies. I like, going to their movie theaters even, right? We don't want to buy it just based on that fact, or based on the fact that, it's going up and I like going to the movies, right? Yes, we need to invest in things that we understand and invest in things that we know, right? But you're not getting into AMC right now just because you like the movies, right? Because after we go into the place where we understand something and we know a particular company and we know how they make money, then we have to actually do our research. And the problem is, if you actually did your research on AMC, there's no way that you would come to a reasonable basis by which you should actually purchase the stock. It makes absolutely no sense. So just because you like going to the movies and you understand the movie theater business and all these different types of things does not mean that that is why you should purchase the stock. From a balance sheet perspective, AMC noted in its fourth quarter operating results that it had more than $1 billion in cash on hand, which not bad, right? This is after issuing close to 165 million shares and over 400 million in debt capital between mid-December and mid-January. But it ended 2020 with 5.7 billion in debt, and some of the debt it's issued since March 2020 has interest rates ranging from 10% to as high as a variable rate of 17%. Servicing this debt is going to be extremely challenging, and it's going to minimize what AMC can do with regard to its growth initiatives. As for its income statement, AMC reported negative $1.3 billion in free cash flow last year, so they're not creating positive free cash flow, right? This figure should improve with the company's theaters now open in some capacity. However, profitability remains a long way off. Just because you can, have some revenues does not mean that you're necessarily going to be profitable, right? Over the next 24 months, AMC does not look to have enough cash to cover its losses, which is extremely problematic, meaning that they are going to have to either raise more money or they'll go out of business, right? Investors are welcome to like a business, but investing in it without knowing its fundamental details is a huge mistake. Like the movies all you want to, but if you don't understand the company and you invest in it, that's on you. And then the fifth reason that we should not purchase AMC stock is that people have this idea that if they buy and hold, the hedge funds lose, right? So we're just going to buy it and hold it and just stick it to the man, stick it to the hedge funds, right? Well, even though the percentage of AMC shares owned by institutional investors has been more than halved since October, this is likely a function of the company's tripling its outstanding share count. What's more, the bulk of trading volume these days derives from high-frequency trading programs and not from retail traders or even hedge funds. There's never going to be an instance where retail investors own such a significant amount of the float that they'll be able to block downside moves in AMC stock. So that's really important to remember, that volume does trigger these algorithms. And when it triggers the algorithms, then those algorithms are okay with holding a stock as long as certain volume metrics are met and momentum metrics are met, right? So that can uphold the stock for some period of time. But ultimately, right, retail traders are not going to have enough power over institutions that they're going to be able to keep a stock from going down because it needs to go down. Because sometimes stocks need to go down. And I'll tell you right now, AMC stock, based on the fundamentals, needs to go down. It needs to go down in a very huge way. Now, I'm not shorting it and I'm not pushing it downward. I'm just telling you that there is no fundamental reason why AMC should be worth what it is, or there's no fundamental reason why it should have popped in the amount that it did today. Now, some people argue, well, AMC is turning the corner, right? They're going to start making some positive strides. Well, it is hard to say. AMC lost about $4.6 billion in 2020 compared with a loss of $149 million in 2019. The company's revenue fell 77% to $1.24 billion as sales of American tickets declined 81%. Those are ugly numbers. Those are very, very bad numbers. Now, obviously, COVID drove a lot of that, but those are bad numbers. Yes, the most recent box office results provide some hope, but the company remains challenged by Hollywood's increasing willingness to put movies on streaming platforms like Netflix, Hulu, Disney Plus, and HBO Max. The company warned last year that it might not survive. And that's crazy that a company can say in a previous year that they might not survive, and then their stock explode the next year with no reasonable basis for the stock to explode. But this is what you have to understand, is the fact that the stock has exploded has allowed them to raise some capital. It has allowed them to take out some of that high interest debt that I talked about a moment ago and to issue new shares of stock through which they have received cash, and that can keep them afloat for some time, right? So we don't know if they'll actually survive. Now, we see some indications of strong pent-up demand from moviegoers ahead of what seems like a very strong film slate for the summer and through the holiday season, right? But this does not mean that they are going to be profitable. It does not mean that they are going to be worth anything substantial. And it definitely doesn't mean that they live up to their current valuation in the stock market. Hollywood studios now looking to their own streaming platforms makes us think that AMC faces a steep uphill climb on the recovery path to a likely new normal that could compromise the theatrical window. Okay, so AMC's in trouble. Okay, and so I don't want you to think for a moment, and I'm not trying to slander the business. I'm not trying to talk bad about the business. I'm just saying from a very objective view of what they have going on, right? There's one thing that you can say for sure. They're not worth what the market says that they're worth today, right? And this is the danger of these meme stocks, is that the market's telling you, hey, this is the price for this stock, but it is nowhere near some actual determination of value. So you have to go in and determine value for yourself, right? And I wouldn't suggest getting involved in any meme stocks at all. I absolutely have not done so, because ultimately none of it is based in reality. It's not based in what the company is actually worth. It's not based in what the stock should be selling for. And if the stock is not selling for what it should be, or at least not around what it should be, then you shouldn't even think about owning it, because we want to buy things that are undervalued relative to the market. And none of these meme stocks are currently undervalued relative to the market, and they likely won't be for some time. But I'm just telling you, you watch. I'm not saying it's happening this week, this month, next month, 6 months from now. But eventually, these stocks must come back to some reasonable basis of actual value. And when retail investors get tired of it and they move on to some new project, and they will move on to some new project eventually, you'll see that the actual value of these companies is going to be reflected, and it is not likely to be pretty. But as for now, I guess to the moon it is, right? AMC's shooting upward, and I'm interested to see what it does here in the next few days. But I hope this gives you a better idea of exactly what's going on in the market right now. If you hear things about AMC and GameStop, you can actually have an opinion and understand what's going on and make an opinion for yourself. I'm just giving you my opinion and what I think about the particular companies and about exactly what's going on